Bhavin, hi, morning. Good to have you on the show. Any move or material move can we expect from the index today, or do you think it'll continue to be range bound as it has been for the past many trading sessions?
Good morning. So over last trading sessions, what we have observed is that market has been extremely ranged. Volatility index, if you look at particularly, that has sharply declined over last couple of trading sessions. It's India VIX, if you look at, it is now moving closer to 11 mark. So that is clearly indicating that market is not anticipating any major risk at this point of time. However, at the same time, we are not likely to have any major negativity or volatility for the time being. On other hand, we have some crucial resistance to watch out for, which is closely around level of 25,250, which is your 20-day EMA. If Nifty is able to move past that particular level, high probability that we will again try to retest higher level. At the same time, on downside, we have a very strong support around level of 25,000, 24,900, which is your 50-day exponential moving average. Having said that, put writers over last couple of trading sessions has been moving higher towards level of 25,100. So that ideally should have a good support. And if we cross 25,250, 300 range, call writers ideally should come to unwind the position. So something to watch out on this particular day will be how option data pans out, specifically if we try to break that level of 25,250 on upside.
All right, so that's the take coming in on the index front. Let's watch out for that. But the other stock that is going to be in focus today is Dixon Technologies, as the government will actually scrutinize the recent arrangements of Dixon with Chinese firms. But sources tell ET now that due process will be followed for the approvals of this JV. And my colleague Sumita Karir is joining us with more details on this one. Sumita.
That's right. Government sources indicate that a due process will be followed under Press Note 3 on Dixon's JV with Chinese players when Dixon's application is submitted to the government. Remember, under Press Note 3, which was introduced by the government in 2020, it made prior approval mandatory for foreign investments from countries that share land border with India. These countries are China, Bangladesh, Pakistan, Bhutan, Nepal, Myanmar and Afghanistan. Now, related to the electronics components manufacturing scheme, which the government introduced with an outlay of over 22,000 crores, there was a clause which essentially was related to participation by Chinese companies. But this participation had a clause that it can only happen in case of JVs of these Chinese companies with Indian entities, where Chinese companies will have strict limits on equity ownership and the Indian partner will have a larger share. There has to be a mandatory tech transfer as well. That was also one of the conditions. Now, in case of Dixon's proposed JV with China's Chongqing Yuhai Precision Manufacturing, Dixon is likely to hold a majority 74% stake in the JV, and the intent of this JV is to focus on manufacturing precision components for laptops, mobile phones, IoTs, autos, etc. So a review will be done by government, including a due process, which will be followed under Press Note 3.
So that's the exclusive coming in on Dixon Tech. We'll keep you updated as and when we have more there. But Bhavin, what's your take on Dixon Tech on the charts? Given the kind of fall we've seen from January onwards, and then we've seen a slight recovery as well. Where do you see the levels on the charts now?
Yeah, so if you look at last couple of trading session has been very interesting for Dixon. Stock witnessed a strong move from level of about 13,000 odd levels to currently around 16,100. Having said this, we now have a very strong buy zone. The accumulation earlier that occurred around level of 15,200 to 15,300 ideally remains a very strong buy zone. However, there is a clear resistance around level of 16,400 to 16,500. Unless the stock is able to move past that level with good amount of volume, I believe that higher level will continue to act as a strong resistance zone. We will see good amount of supply around those levels. At the same time, as long as we are able to manage on the downside 15,200 to 300 kind of a level, it will be largely a ranged kind of a trade for Dixon Tech.
Glenmark Pharma, which is flagging off.
So, if you look at the entire real estate stock or the sector, we are looking at good amount of supply at higher levels. The most of the stocks have witnessed a very strong run up over last couple of weeks. So, if you particularly look at the large cap stock like a DLF, it is currently quoting somewhere around 840-45 kind of a level. Uh, if the stock is able to break above level of 865 to 870 kind of a zone, we are looking at a fresh move towards level of 950. So it is currently putting on a longer term time horizon on a downward trending channel. Breakout of the same should ideally be kind of positive. Another stock from this particular pack that we like is Oberoi Reality. The stock has been one of the strong performers of late. However, if it is able to break that level of 1820-25 zone, which is an immediate resistance for the stock, high probability that stock will make a strong move towards level of 1940 to 1950. On the downside, we have a very strong base around level of 1745 to 1750. So something to watch out on both these things.
All right, so those are the preferred bets when it comes to the real estate sector. But with this, let's also get you some of the mid-cap ideas from both of our experts. And Somil, you go first. Tell us within the mid-cap space, which is the stock that you're tracking this morning?
I think in the mid-cap space, PSU banking is looking good, and that is the only space I think should do good in the very short term. Canara Bank is the one which I'm looking at. It has broken out a small consolidation. Stop loss would be around 113 and targets would be around 122 and above that. But overall, the stop loss should be very strict because the markets are very range bound, and if the bank nifty breaks the range on the downside, then the PSU banks and the private banks they will start bleeding. So stop loss should be tight, and the stop loss should be 113 for Canara Bank.
So that's Canara Bank that you're liking from the mid-cap space. Bhavin, what about you? What's looking good from the mid-cap basket?
Yeah, so there are two stocks that we like. First one is IOC. So we have seen a very strong move in majority of oil marketing companies. Stock is currently quoting around level of 152. We believe that stock is due for a move towards level of 160-65. Of late, if you look at over last 3 months, it is one of the kind of underperformer from that OMC pack. And I believe that the momentum should play out going forward for this name. So this is one stock that we are positive on. Second one is Max Healthcare. Stock is currently quoting around level of 1260, 1265. It had earlier seen a very strong move from level of about 1180 to 1310. Cooled off a bit over last 5 to 7 trading session. Anticipation is that high probability given the entire setup, stock ideally should move closer to 1330 on upside. Stop loss for the same should be close to around 1210.
All right, so those are the mid-cap bets from both of our experts. But with this, let's also tell you what else we are tracking in terms of the big headlines. And first up, after reports emerged that US President Donald Trump plans to fire Fed Chair Powell